Joining us on Talking Sense today, economics editor of The Common Sense, Bheki Mahlobo. Bheki, great to have you on, man.
Gabriel, thank you so much for having me on the show.
So, I normally like to start Talking Sense with an introduction to the person that I'm talking to. But for the viewers at home, just so they're aware, you are the economics editor at The Common Sense. And I want to talk to you a little bit today about economics. But before we do that, can you give us a little bit of your personal history and your background?
Yeah, I think that would be a great starting point for us to start off to is like, who am I? I grew up in rural parts of South Africa. I was born in Joburg, Jen, but my early years as a kid was in the rural parts of the Eastern Cape. And what I mean by rural, it's about 8 hours drive from here to get to where my home is, from Johannesburg to a village called El Papasi. Now, El Papasi is a beautiful village. It's covered by mountains and wonderful people, but its infrastructure lacks that of the cities that you see in Johannesburg or that of KwaZulu-Natal, as well as that of the Western Cape. And what I mean by this is that your nearest town is like an hour away. Your nearest hospital, even at that of a clinic, is about an hour and 30 minutes away, but you're like 10 minutes away from a church.
Yeah.
But you're far from the town or hospital, not because it's an hour drive. You're far because of the gravel road. You have to drive slowly on gravel roads, very patchy. There's rocks everywhere. So you need a very big car in order to visit me at home. And I hope you get a bakkie there, Gabriel. And life for us, and what I mean by us is that for my sisters, cousins, and brothers was rough when I was young. What I mean by this is that the Eastern Cape got its electrification infrastructure in the early 2000s. And before that, I can actually recall this. We had no power at home. In order to have lighting at our home in El Papasi, my grandmother would need to use paraffin for lighting in sort of this sort of glass candle.
Hmm.
And that was not the healthiest option to do so because if you have that candle in a closed room, your mucus in your nose and you just try to blow it through a tissue will come up black, like tar black. That's because it's unhealthy.
Mm.
And in order for us to have warm cooked meals at home, she needed to make food at a makeshift steel oven where she would like get wood from trees outside, dry them, put them in this makeshift oven underneath, make a fire, basa, we call it basa, just making a fire. And then it would warm up this steel oven in order for her to cook, or we'd just cook outside of using a cauldron.
Mm-hmm.
And this was very unhealthy because the emissions of it, the smoke of it, we would inhale it. And so life expectancy for a lot of those individuals was quite low.
Yeah.
It was a very harsh life. You're talking about women, for example, that are walking to get water at a borehole and they have buckets on their heads, and they're balancing it. Like there's no drop of water that's coming out of that bucket.
Yeah.
It's a very, very, very harsh life. But the philosophy and teachings that my grandfather and grandmother emphasized for their kids as well as their grandkids is that you have to get yourself educated in order for you to become successful and in order for you to escape this very harsh life that you see in front of your eyes. And so education was highly emphasized in my family. My grandfather was a policeman.
Mm-hmm.
My grandmother was a teacher during the Bantu education system. And then my aunts, I was raised by strong Xhosa aunts. All of them outside my mother are teachers. My mother became a nurse in her early years. And so life was quite rough. Go from that very harsh life and gradually over time it becomes better as my grandmother's kids get jobs, and suddenly we go through a phase where we saw there's no power at home to having the steel makeshift oven type of, in order for us to have home cooked meals, to now having an electric oven. Now suddenly there's lighting at home, and now people's lives are just generally getting better because my aunts have jobs, and then now I can also go to school as well. And so for my grandmother, she goes from this harsh life and her kids seeing this very harsh reality to now her kids having jobs and our lives generally improving over a number of years after that period.
Yeah, and so you then move back, well, I guess it's kind of back to Johannesburg where you were born. And can you just tell us what that kind of was like, the transition out of, the rural living, the very harsh environment to now, you're living in the city and you're going to school and you're getting an
Mm.
education. Like what was that like? And then at what point did you kind of realize during that period that you were interested in economics and
Yeah.
interested in kind of doing what you do now?
Yeah. I mean, the experiences of many people that come from the parts of the country that I come from, that of being of the Eastern Cape, is that you come from rural South Africa to go to the city,
Mm,
but you don't go there to the city because you're interested in the city. You go to the city because the city has good schools and
mm,
jobs. And for a lot of my cousins, as well as my sister, we went to the city because that's where the good schools were. And I got the opportunity through the hard work of my mother. My mother was probably the best work I've ever seen in my life.
mhm,
And she had to do that in order for us to go to really good schools. I would see her at 6 in the morning,
mhm,
and I would see her at 6 in the morning the next day because she was working double shifts in order for me to go to very good schools in the East Rand.
mm,
And it's again through the teachings that have been entrenched through my grandfather, that being of education being so important. Like
mm,
if you were flaking at school,
mhm,
you would have a very harsh December. Every December would just go back home.
mm,
And if you did well, the incentive, because we come from rural parts of the country, is that they would slaughter sheep for you or a cow. So I was always motivated because I love meat. In fact, Xhosa men love meat. Xhosas in general love meat. So I was quite motivated to actually educate myself.
yeah,
And education became the tool for me to escape the harsh reality that I was seeing in my life,
mm,
and particularly my family's life. So it got emphasized through primary, got emphasized through high school, and my mother was sacrificing her years as an
mhm,
early adult in order for me to have this opportunity. So I couldn't take it for granted.
mm,
And in this environment of very good schools, I got exposed to really good teachers at the time. And I appreciate them, the likes of which who still inspires me even to this day is by the name of Mr. Willy van Donder, who was my economics teacher in grade 10.
mm,
And what was quite fascinating to me is how economics gave me the tool to understand a very complicated world, for especially like I was young at that time. But
yeah,
it gave me the tools to understand what was going on, because every holidays,
mm,
which is a thing that many young black South Africans that come in Eastern Cape or KwaZulu Natal or rural parts of the country, school holidays, June or December, you go home.
yeah,
You don't consider the city your home, even though you grow up in the city. You don't consider the city your home. You always go home, which is the Eastern Cape for me.
mhm,
And what I would see in the Eastern Cape, which is much more of a farming community, is that I'd see sort of early indications of what may happen in the city, because the city, in terms of getting crops, would get it from rural parts of the country, or
mhm,
getting meat would get it from rural parts of the country. And weather patterns in those parts of the country, if they were not favorable, then you would not have a good harvest.
mm,
Through the savings of my grandfather, he managed to buy a plot of land,
mm,
farming land, and I was working quite harsh in the field, like so much harsh, like during the harvest season, it's very hot and you would
mm,
get very thirsty.
mhm,
And I appreciated those times because that allowed me to actually start to put together the links between things.
mm,
So if we didn't have a favorable harvest, and other farmers also didn't have a favorable harvest, and your cattle as well
mm,
were not reproducing effectively, I would go to the city and I would suddenly see the prices of maize meal for pap go increase, for example, or
mm,
certain prices of beef increase, for example. So you saw a sort of a decline in supply
mhm,
caused by unfavorable weather conditions having an impact in the city, or having an impact in rural parts of the country.
yeah,
And in those parts of the country, I'd also see some type of seasonality with workers. In harvest season, you'd employ a lot, and then when it's not harvest season, they would not be employed. So I was quite curious when I was young, and all these factors, seeing the rural parts of the country as well as that of the much more developed city, birthed an interest in me of becoming interested in economics, and that gave me the tools to actually start to understand this world.
And so you're interested in economics, and you're kind of, I guess, looking around trying to like learn about the subject. You've got, as you mentioned, your wonderful teacher in high school, but what was it, and how did you get into the kind of economics that you are into? we aren't at the common sense, particularly, friendly towards the John Milton Keynes of the world.
Yeah.
We're much more on the Austrian school of economics
Yes.
side. So,
Yes.
like, where was the introduction to that, and how did that start to help you understand what you'd seen in your kind of past, in your history and your background?
Yeah, so those two different schools of economic thought. One, which is the John Mayer Keynesian way of economic school of thought, is that essentially a country can never go bankrupt. And by a country, we essentially mean the government. The government can print as much as it wants, and that will not have dramatic negative consequences because they can always manage it through the likes of pulling the levers of the economy through, such as that of interest rates, which we'll get into. And there's the opposite school of economic thought that actually looks at them and says, hey, when you do this, you're actually causing unintended consequences where you're actually stealing from your citizens through the purchasing power, because when the government prints itself out of debt or prints itself in order to artificially stimulate an economy, it causes inflation. And that inflation, what it is essentially the stealing of citizens' purchasing value. We talk about such as, like, for example, a basket of goods and services in the country. About 500 rands could get you quite a decent basket of goods in the country, but now you need 1,000. Now you need 1,500. And what that is inflation.
Yeah.
And so what the Austrian school tries to do is try to understand the unseen consequences of sort of the Keynesian school of thought, which is quite popular in governments that follow that type of thinking. Now, I was fortunate that in high school that my teacher was actually in the lines of Austrian school. So it was not to say that I suddenly had this epiphany that I'm going to look at other schools of economic thought. Is that I was fortunate enough that I came from an environment where my teachers actually understood Austrian economics, and he did something that got him into trouble actually in school. He said, this is what economics is when you look at the textbook, but I'm going to teach you what are the consequences of some of these policies proposed in this textbook. And I appreciate that even more. I love that. And it was like, for the first time in my life, I saw color. And that inspired me and actually gave me the ambition to become an economist. I knew that I wanted to become an economist because before then I actually did not know what I wanted to do. It's quite confused in my life at that point in time, up until that point.
Yeah. And so you kind of you've got this burgeoning interest in economics. You go and study it at UNISA, if I remember correctly. But during your studies, you're fortunate and lucky enough, and maybe the fate throws a couple of people into your path that have a very significant impact. So can you tell us about what happens, how you find yourself in the world in which like the Institute of Race Relations world, and then some of the people who had an impact on your thinking at that time?
Yeah, so from high school, what really pushed me to study at UNISA was that there were no other options. My mother couldn't afford university. She couldn't afford to send me into really good schools. I have a younger sister who's just 1 year younger than me, but we started school at the same time. So when we matriculated in the 12th grade, my mother was like, okay, I can't afford to send the both of you to university. My sister had a greater academic record than me. So I was like, my mother's like, okay, she has the best shot for success. I'm going to put a lot of focus on my sister because like she was getting quite good offers from UWC. With me, I was fine in school, but I wasn't your greatest academic kind of scholar. I only became great when I actually started finding my passion. And through really hard work and studying, I was like, okay, I have two options here. I can either put my mother in massive debt and stick out a school loan, or I can just look at this university called UNISA, which allows you to basically study by yourself. They give you a textbook at a fraction of the university cost that most university charge students do. And I was like, okay, let me look at this UNISA option. And at that time, if you study through UNISA, you still have the same level of qualification as someone that comes from like your really high-ranking universities in the country. And I was like, okay, let me try UNISA. And what I actually loved it because it allowed me to have the flexibility to actually study, But at the same time, I was so curious about this type of thinking that was influencing me at a young age, which you mentioned, the Austrian School of Economic Thought, but also how governments are formed. And I wanted to exercise that quite greatly. And so I started attending business conferences when I was like 18, 19 years old, trying to understand like what is going on like in South Africa, like what is actually leading to things to improve and then leading to things to not improve. And that's based off my own personal experience as a young South African. And because I was studying through UNISA, I had the flexibility of also working at the same time. So through my own hunting down of these business conferences, I met two key particular individuals. One being that of Davi Root, who still inspires me to become an economist. And the second is David Ansar, who at the time was the director of the Center for Risk Analysis, which is sort of a sister body of the Institute of Race Relations. David Ansar is now currently the CEO of the Free Market Foundation.
Yeah.
And through them, then they saw this very young kid who I can even remember this day. I was like just studying at home, and I had dirty Nike sneakers at the Gauteng hotel in Sandton. And I'm walking in these white floors. I'm looking down. I'm like, oh my days, I have dirty shoes here. And you have managers and investment funds for this particular business conferences because they wanted to see Davi Root. And I'm this young kid, and they're looking at me, who is this guy? And I had a friend at the time, and my friend was like, hey, listen, just like ask Davi a question. I was like, I can't, like, look at these people. Like, who am I? But he encouraged me. And I was like, okay, let me ask him a question. And when I did, which was actually looking at the school of thought of Austrian economics at the time, was like, what actually leads to a successful country? Davi took a keen interest in me, as well as the people in attendance, some of which are still influential today, which led me to meet David and Sarah. And through that, I got my internship as an economic researcher at the Center for Risk Analysis, which looks at strategic advisory services and long-term trends. And through that, I met Frans Cronje, who's currently the director of the Common Sense, as well as that of the Frans Cronje Private Client. So it was particularly that environment. And in that environment, which was quite harsh and hard work, I actually started to excel in school because I was actually putting my experience in my academic studies, where now I started getting distinctions for the first time in my life. And yeah, that's basically what happened in my early 20s.
And so you go to the Institute of Race Relations, and you've mentioned to me before that there were some thinkers that you encountered in your kind of time there that had a kind of profound impact on the way that you viewed the world, the way that you viewed South Africa. Can you just tell us a little bit about who those people were and what they taught you?
Yeah, so at the CRA, I met Ian Cruikshanks. Now, Ian Cruikshanks used to be the head of treasury at Nedbank. And if you were to go to YouTube, you'd still find videos of him giving analysis of the South African economy. And the key trend or thinking that I got from Ian Cruikshanks, and he's passed away, so may God bless his soul, is that whenever you read economic analysis, what does it mean for the average South African? And when he was like hinting on that, I was like, actually, like, yeah, that's so correct. You know, I'm like this kid that uses the taxi to come here. So when you're speaking about petrol prices and the rand, like, I need to put that in a way that relates to me. It means that my taxi fare coming to this institute if the petrol price rises, I'm impacted in that. If the rand weakens, that means like my purchasing power is also impacted by that. So it was through Ian that I started thinking, how do we pull together these links of economics and how do you relate it to the average South African? Because those are the people that drive economic activity in the country, and they need to also have the analysis and reading in order to guide their decisions. And another individual that I met there is Anthea Jeffrey, and through Anthea Jeffrey, through grueling work where she would send me to read public documents of policy gazetted by the government, and she was like, oh, okay, this policy, public policy, has good intentions. Like, it's not about the policy's intention, but what fundamentally are its outcomes. And when she said that, I was like, actually, that is actually what the School of Economic Thought has been teaching me this whole time. In that whenever you have a government or particular individuals, they have this theme that they constantly face day to day. because we have scarcity, and what that means is that resources are limited. That's the fundamental principle of economics.
Yeah.
Each and every day, a young South African steps out of their home, they face choices. And in every choice that you make is either you go with that choice or you go against that choice. And there's the trade-off of that is what's called the opportunity cost, which is sort of the unseen cost of your actions. And if you want to see that your well-being is improving over time, you want to limit your opportunity cost and greatly increase your trade costs in terms of personal interactions with people, in terms of you finding a job, in terms of also public policy, which is even more important. And that's how you determine good public policy. You minimize your opportunity cost. And it was through that understanding, through Anthea Jeffrey, Ian Cruikshanks, as well as my other colleagues at the time, John Kane Berman as well, who was the CEO of the Institute of Race Relations. May God also bless his souls. Having this treasure trove of economic and socio-economic data over the past 100 years in the country. The Institute of Race Relations is one of South Africa's oldest think tanks. It was established in 1929, and ever since then has become quite a successful institution and actually combating some of the bad policies at the time of apartheid regime and its impact on Black South Africans, and after that, bad policies that came under the new government. And a fundamental question that was asked of John Kane Berman is that, hey, listen, we are a democracy now, come 1994. There's no need for the Institute of Race Relations. Why are you still here? And the lesson that he told me in his experiences of the time where I would drink coffee with him is that, listen, the cost of freedom comes with the constant visualization of looking at the government's decisions and its impact on policy.
Yeah.
And that's what you must constantly do as an analyst. And through these particular individuals and my experiences growing up, I got inspired to actually carry it with much more seriousness to become an economist.
And so I think there's one person that you didn't mention that you've told me about before. Can you tell me about Bheki Mahlobo?
Oh, yeah, of course. Bheki Mahlobo, yes. Bheki was quite an ambitious guy at my early 20s. He's now gone into the private sector. But at the time, he was quite vocal with his way of thinking. And actually, thank you for reminding me of that. And what inspired me about Bheki is that, I didn't come from a household that emphasized on race. The emphasis was always on education and working hard. But at a lot of the times, a lot of the people that I was meeting I could not relate to them because they didn't come from the same environment that I came from. Some of them were quite well established, and that's good for them. They worked hard in order to get in those positions, but I couldn't relate to them. And with Mbiyake, he comes from KZN. I saw this guy that had just this drive to actually voice out what his particular grievances were with the government at the time. This was about 2019, still the ANC government having a majority in parliament. And I was just so inspired because I'm like, I have these ideas as well, but I'm not public with them because I don't know if it would be right of me to do so, or whatever the case may be. I had this sort of thinking in me. And when I started seeing Bheki, and I also started seeing Zakhele Mthembu right now, who's in the FMF, or aka Zakes, and other people, particularly black individuals, black conservative individuals, because I could relate to these people. These people came in similar circumstances that I did. They grew up in a church. The families are quite traditional, very staunch father figures in their lives. Mine was my grandfather. And so I came to this realization that I also have a voice and I can also express my own thinking. And what I came to find is like, actually, my own thinking is also good because I can also understand what's happening in the economy, and started talking about it. So those particular individuals are the giants of which I stand on their shoulders.
Yeah, well, I think that's a great metaphor to use. Just one thing that was popping into my head as you were talking about the rules of scarcity and Anthea Jeffrey analyzing policy by its outcomes was one of my favorite Thomas Sowell quotes, which is the first rule of economics is scarcity. There is never enough to go around.
Yes.
The first rule of politics is to ignore the first rule of economics.
That's one of the most important thinking of economics is that of scarcity. And because of scarcity, there needs to be a smart way of managing those resources. The Marxists or communists say that they ignore that policy and say, listen, there's so much abundance in the world. And it's only the select few of individuals that hold that abundance that has led to poverty. So they have this sort of fallacy of how fundamentally natural laws work in the world. And because of that, they try to manage a system, which is essentially managing people, managing millions of people's decisions. Recall that everyone has those decisions to make. And the consequences of that, ignoring that fundamental principle of economics, is that you have scarcity and you have shortfalls of supplies, you have price shocks, leading to a much less better way of living for your citizens compared to the other way of doing it, which is much more of market-driven type of governance. And it's not to say there mustn't be a government, but the government should not encroach on people's day-to-day lives. And that's what a market is. It's the average individual interacting through their spending power, how they want to live their lives. And that's what an economy is. And if you have a central authority managing the lives of about 63 million individuals, that's so complex.
Yeah.
And a lot of government officials that have that way of thinking actually do not humble themselves to this understanding that you actually cannot control 63 million people's lives, leading to the detriment of those individuals.
And nor should you, because in fact it is the individual knows what is best for them.
Exactly.
And knows better, at least knows better than the state. Because, someone sitting in Pretoria has no idea about what is in the interest of the people of remind me, it's your hometown.
My hometown, El Papasi.
Papasi,
yeah,
sorry.
No problem. It's a hard name. No one, it's a very, very rural area. No one really knows it.
Yeah.
And out of this rural area came actually one of the key political figures. I mean, neighboring areas such as that of the energy minister as well as the finance minister. Those are neighboring villages. They come from those villages as well.
Well, yeah, I mean, and the most extraordinary one comes from not the neighboring villages, but the village itself.
You're saying me?
Yes, exactly. But the last kind of and we've spent a while, but I think it's very good because it, as you say, the kind of Ian Cruikshank's tying the day-to-day life into these giant macroeconomic concepts is the most important thing, because it makes it relatable and it shows you what influence those trends and those big factors have on your individual life. But the last thing I want to talk to you about your background is you've spent now almost 2 years living in the United States. You bounce. I've been lucky enough to catch you while you're in our offices during your holiday period. In which you've spent taken a leaf out of your mother's book and spent your holiday working. So, can you tell us what it was like, what it's like being in America, and kind of what your experience has been, what you've seen, what you've learned?
Yeah, it was the greatest opportunity that was given to me. And the way that I think about it is that it was years of hard work and preparation meeting opportunity. Once I finished my UNISA BCom degree in economics, I spent some time in the labor market working actually in financial markets, actually understanding the relation between indicators and how they impact such things such as the currency and inflation and economic growth. I had ambitions to actually excel in my academic field. And what drove me was actually my experiences at the institute, my interactions with individuals, and I wanted to pursue a master's. You can't really call yourself an economist without having a master's. That's the thinking that I had. But really, if you understand things and you're able to explain to a crowd, then you're an economist. I was called an economist before I had my BCom degree because I was doing this work. I was on the field doing the work, but I wanted to have a master's qualification. And I was like, where is the place that I can actually challenge myself to do this? And it was overseas. And I had very good grades through UNISA, and I applied overseas, and I got accepted to 5 universities, of which the one that I went for is a private university in California called Chapman University, where I've been there for over the past 2 years, and it's very, very, very tough. It's hard work. But I was prepared through my experiences with my mother, I was prepared through my experiences in work, and I started also doing well there. And my experience there, I came in August of 2024.
Mm.
And about 2 months after was Mr. Trump winning his presidential election in the US.
Yes.
And where I'm based, it's called Orange County. It's a county in a blue state, California. And what's so interesting to me, my experience there, is that you walk out on the street, in the corner of the street, there's someone selling MAGA flags and Trump hats and everything. And people there are largely evangelical Christians, Republican type, your day-to-day ordinary people. And then you go to the university, and Chapman is a very good university. Though you go to the university, you interact with some people and then say, this was the death of democracy. So you see these two very polar opposite worldviews, and that's the world that I was thrust into. And like, from my environment, I come from a very diverse environment. You know, we spoke about real parts of the country in Johannesburg. And when I was in the city, I was seeing people who are Sotho, people who are Tswana, people who are Zulu, and people who are Afrikaans, but in Sundays we all go to church. So we had all these shared commonalities, and comes to certain things that concerns us, it would be largely the same. And you throw me in this world where everyone is having a different worldview and perspective. And it's like, it was quite interesting for me to see, and I'm quite appreciative of for me to see that. But the people in general, where I am, are the most wonderful people that I stay with. My landlord treats me as if I'm her grandson. The people on the street as well are quite friendly, particularly where I am. And even my classmates as well are the most excellent and intelligent individuals that I ever had the privilege of studying amongst. So my experience in America, just seeing just this different world, this big world, and it's a very, very big country. And even where I am, you know, the cup sizes are ridiculous. You know, the regular is our large.
Yeah. And
the large is like almost a liter. And almost in every restaurant that you go to, you have unlimited refills in like restaurants. So they call a fountain drink. And so everything is big and everything works, and basic service delivery works and everything works. And it reminded me of a period in my early years as a teenager where my mother used to drive in these very nice neighborhoods in Pretoria. And she would say, like, look at this area, this house is one day be us. And you see this sort of radius that you could probably stretch about 40 minutes, whereas where I am in California, it's as far as the eye can see. Just enormous amounts of wealth and enormous amounts of like good quality of living for ordinary Americans. And I was like, this is actually what South Africa can be. There's nothing fundamentally different that prevents us that prevents South Africa from achieving that outside of public policy in the country.
Yeah.
And so that was my experience when I'm constantly in the US. I'm like, wow, this is actually such a good life to live. And I think, and I'm so optimist. I'm an optimist by nature over the long term, that South Africa also has the ingredients to achieve the success.
And I think that that's a perfect place to segue into talking about South Africa's economy. And so maybe the place that we want to start at is talking about growth in South Africa and what the outlook is for this year. But I know that you've got, in order for us to do that, you've got to get us through a few concepts to get to what the growth outlook is. And so just take us through kind of what the growth outlook is, and what that means.
Yeah, so here at the Common Sense, we look at the long-term trends. And you need to do that in order to understand the broader economic environment of the country, as well as its prospects. And if you look at South Africa's 30-year trend, in order to answer the question of what is the living conditions like today, South Africa's economic trends are explained in two parts, in which you see this period, particularly in South Africa's early years as a democracy, a period of high levels of economic growth. And what fundamentally underpinned those high levels of economic growth was that of confidence. Now, there's an indicator called business confidence. What this measures is actually the commitment or the willingness of businesses to commit capital into the South African economy. Now, when South Africa became a democratic country in 1994, the early administration, the ANC, under the leadership of Nelson Mandela, picked up an economy that had confidence levels, the willingness of businesses to invest in the country of about 40 points. This index, called the Business Confidence Index, ranges between 0 to 100, with index levels of 50 and below suggesting weak confidence or an unwillingness to commit to towards the South African economy, and an index level above that suggests a high level of commitment towards South Africa. And the early administration at that time saw a low confidence level, and that was off the back of the volatile period in the 1980s. And through the really high caliber of leadership of Nelson Mandela, this was a really shrewd individual and very, very staunch. It actually reminds me of the people that I grew up in, my grandfathers and he was Xhosa as well. That doesn't say anything though. But in terms of his policies, this was an early administration from Nelson Mandela that picked up weak confidence levels to that of Thabo Mbeki, that through public policy took confidence levels in the country to the highest it's ever been at 80 points in a 30-year trend. And next to that of business confidence is consumer confidence. Now, this is the willingness of South Africans to actually spend in the South African economy. Consumption expenditure by households in the country is about 60% of national GDP. And in that period, from 1994, weak confidence level, to about 2008, where confidence level reached the highest peak it ever has achieved, you also saw the same trend happening with consumer confidence. And if you can recall this time, this was the cutting of interest rates. If you look at South Africa's interest rate perspective, at that time, the South African Reserve Bank was cutting interest rates, but it was cutting interest rates in an economy where households' debt as a proportion to the income was lower than what it was. So you had this huge pool of consumers that could spend. And so confidence levels rose. And from that period, the ANC administration decided that now, after the 2007 Polokwane conference and Mr. Mbeki packed up his offense, there was a change in public policy. Where now public policy, its intentions were good, but its outcome became bad. Early indications of that was actually confidence levels in the country where they currently are present, where they're about half of where they saw their peak in about 2008, where it was at about 80 points. And the consequence of that, of having confidence levels being halved over the past decade, is that the fixed investment number, which is essentially now it's actually hard cash being committed to South African factories or businesses to actually expand the operations, went from a trend that was rising from 1994 to 2008, where the ANC administration inherited investment levels about 15% as a proportion of the national economy, to about 22% to come 2008. Now, that's quite important because that period, if you look at what other countries were doing, emerging markets, if you want to compare South Africa to apples, is that their fixed investment numbers were at about 25%, approaching 30%. So South Africa was almost matching them. We're about 3 percentage points from matching their investment levels. But once the policy direction changed, confidence declined, which led to fixed investment to where it currently is at about 15% of GDP. The consequence of which, the cause and effect, there's cause. You write policy and the effect of it, it has impact on confidence. Out of confidence, you have investment. And if you change that, you change that linking of chains.
And
no, go ahead.
On that, so you talked about this relationship between the business confidence, so the businesses, kind of want to feel more comfortable spending cash, expanding their operations, which then means that consumers, it kind of follows that consumers start to spend more cash because they can see that the business is expanding, there's ways for them to earn more money. And then that has an influence on the fixed investment rate, which is the amount of capital that's committed to in terms of investment in the country. And so that's kind of more, we conceptualize that as the kind of inflow of money into
it's literally your business setting up shop either in Johannesburg or other parts of the country and say, okay, I have this business here and I'm leasing this property. I want to expand my shops from having one shop to having about 5 shops. In order for me to do that, I need to actually invest and build these structures of these businesses, and I need workers. So when you're talking about fixed investment, it's actually the commitment, the money poured in by businesses to expand their operations.
Okay.
And in the early years, under the leadership of Nelson Mandela and Thabo Mbeki, businesses were actually doing that. They were expanding their operations. They were buying more real estate in the country. But once that changed, they became less confident. And being less confident means that you're not as willing to actually expand your operations. In fact, now you're seeing that, okay, I'm not confident based on this public policy. I'm not seeing as much consumers as I was before. Therefore, I'm not going to expand. I'm going to maintain where I am, and the money that I'm going to use, just going to use it to paint my shopping centers in order to maintain the quality that I have right now. But I'm not going to expand outside of that because I'm quite uncertain. And the consequence of that is that you saw fixed investment levels in the country decline from where they were in 2007, 2008, their period, about 22%, to where they currently are below 15%. So trailing behind about 10 percentage points what emerging markets are currently achieving. And that's quite important because if your businesses are not expanding, that has an impact on economic activity in the country. Fixed investment is a lead indicator of what actually happens with the GDP number that most economists quote. And
on that, can you just explain? So, what is the relationship then between the fixed investments that's coming into a country and then the growth of that country?
Yeah. So when we're now talking about commitment by businesses, you're actually saying that they're spending in the South African economy, and that's what drives it as well. So there's spending, there's investment, there's putting money in South African banks and buying goods and services by these particular individuals and entrepreneurs in order to expand the operations. And through that spending, through investment and investing in the operations, it leads to an improvement in the economic activity, because now suddenly, let's say the output from having one shop goes from about, let's say they were selling about five sweets, ileke. So like that's how my grandmother and grandfather used to incentivize me to study harder. Let's say you have a factory that produces about 10 sweets. This is just a silly example.
Okay.
It expands to about 5 shops, and now suddenly they can produce about 50 sweets. That increase from 10 to 50, that's your economic gain that you've got from that particular shopping center or particular businesses. And because they're spending, you could sort of see this happen before you see the GDP number. You see the shop coming and building and increasing its output, and the consequence of that is that we have more goods and services, leading to economic activity to improve in the country. And that's exactly what South Africa saw in its early decade, where growth lifted from under 3% in the early years in the 1990s to where between 2004 and 2007, South Africa consecutively achieved GDP performance eclipsing 5%. That's quite important because that was the first time South Africa had ever achieved this since 1960 in terms of consecutive 5% economic growth levels, and that was achieved by high investment numbers. And once you saw confidence decline and the fixed investment number decline as well, you saw economic output in the country measured as GDP, which is the growth of the economy, the size of the economy this year compared to the size of the economy last year, declined from growing about 5% each and every year to 2%. And currently, if you look at the span of over 17 years, has averaged 0.8%.
And what's important about that is that the population grows, I think you told me at about 2% every
exactly.
year. So if the economy is growing at 0.8% and the population is growing at 2%, in fact, we are getting poorer year on year because there's more people than the economy has expanded to.
Yeah. Exactly. And if you take that calc, right, you have an expanding population of about 2%. That might not sound like a really big number. It's 2% of 60 million people. That's a lot. So you have 2% of an expanding population, and these particular individuals, once they matriculate or they go to university, you have an expanding workforce. These are people now looking for jobs. And if your economy, which really what it is, it's the opportunities of the country. If now suddenly those shopping centers are not expanding and they're maintaining, in fact, you're losing some of them, that means the opportunities of those young South Africans is shrinking over time. So if you have a GDP growth rate of sub 1%, what that means is that your economy is not growing enough in order to absorb the large pool of the economically excluded in South Africa. And that's the relation really of that GDP number, because it has an impact on employment. When South Africa was growing at 5% economic performance, this was the same level as what emerging and global economy was growing at the time. South Africa's the employment number went from about 8 million people being employed to now nearly double that number come when Thabo Mbeki packed up his office, to nearly that of 15 million. In fact, if I wrote his speech, I would say you doubled the number of people employed.
Yeah.
Because essentially that's what happened. And I saw this as well at a much more at a micro level rather, in the Eastern Cape, where my aunt's got a job. Now we have electricity in the country. In fact, in that period, in 1994, about half of South African households went to bed without having electricity for cooking. Come when the economy is growing into that of 2008, that number declines to about 20%, and the number of people employed is increasing as well. So the material circumstances of people through employment was improving. But not only that through employment, but also through service delivery. We went from using paraffin at home for lighting to now have electricity in the household. We went from this makeshift oven, which was quite unhealthy for us and reduced life expectancies for people in rural areas, to now have electricity at home. And the trend of that shifted once policy changed under that of Jacob Zuma and now Cyril Ramaphosa, in which confidence decline and fixed investment decline, and now you have an economy that's growing sub 1%, meaning that from 2008 until now, where in the early years we added about nearly 8 million people into the employment category, we've now only added about 2 million people in the employment category. If you look at the same period in that time, in let's say decade, you minus a few years there and there, but you've only added about 2 million people, and it's because we're not growing enough to absorb those young South Africans.
And so then let's chat about this year's kind of growth outlook in specific, because so we've laid out these historical trends, which kind of ground our understanding of the growth level. But I had a conversation with John Steenhuisen recently, in which I touted kind of the good and the bad of this. I said, listen, this year we're projected to grow 50% more than last year, which sounds great, except last year we grew at what, 0.8%?
Last year, 2024, grew at 0.5%. 2024.
2024.
So 2024's economic number for the year was 0.5%, and in 2025 it's expected that South Africa's GDP growth will eclipse 1%.
Okay.
That's where the 50% growth rate number comes from.
And now, because of the expectation of this year is what, about 1.5%?
It ranges, the forecast for this year, it ranges between 1.2 to 1.4%.
Yeah.
So it's a better number than 2024. But if you look at it, it's not enough to absorb those large pool of South Africans that are currently unemployed. And South Africa's unemployment is actually quite something to also look at. It's actually not good. So you have an unemployment rate of about 31.9%, 32% unemployment rate, the highest in the world.
Yeah.
And speaking about my experiences in America, I saw a lot of young people being employed. That was quite odd for me, because from where I come from, a lot of people my age still don't have jobs. Whereas from 16 years of age, these people can work in restaurants.
Yeah.
And they get experience in order to now be productive in the labor force. And that's because they're expanding, their economic performance is actually growing. The economy is growing about 3%.
Yeah, well, I mean, just I've also have some experiences in the broader West, and in countries with very low unemployment rates, and there is that visceral difference when if you, as soon as I was interested when I was studying, I wanted to have a second job, or a part-time job, to be able to have some extra spending money, because I wanted to do naughty things. And as I could go to essentially almost any cafe in The Hague where I was based and say, listen, I've got a little bit of experience, do you guys have a job? And almost all of them were constantly looking for work.
Yeah.
And for workers, because
you saw those hiring signs, eh?
Yeah, exactly.
That was amazing. I'm sorry to be tangent. That was shocking to me, seeing a hiring sign.
Yeah.
That was like, wow. That was actually amazing. And it's because you don't see those too often. I mean, of course there's companies hiring, but that's much more for your skilled labor.
Yeah.
For your less skilled labor, those opportunities are quite scarce. and you don't see those hiring signs. And that's largely because of policy, the effective policy that we've been following since 2007 under this administration has led to an economic performance of below 1%. Although now economic performance is expected to improve, but it's not improving because of policy. If you look at those trends that are laid out for you there, they still remain at the trends that they've been following over the past decade and not where they should be, which was something that South Africa was actually achieving. And South Africa's economic prospects are improving because of external factors and not because of government policy through the legislation.
So let's talk about those external factors, because one of the things that I did really want us to get onto is talking about the rand. And I'll give you credit, give you kudos where it's due. You wrote in December of last year, I think it was in December
last year.
You said that the rand would test the 16 level to the 16 rand level to the dollar, and as we're sitting today, it's at about what, 15.20?
15.68.
15.68.
Yeah.
And so you were proved correct in your call. So kind of explain to us how we understand what drives the rand price, as like in my layman's term, it basically has everything to do with the dollar and not the rand.
Yeah.
So can you walk us through that a bit?
Yeah, much of the South African rand's movement is based off the dollar. The dollar is the global reserve currency. And what that means, if you want to do international trade, you buy in dollars and you sell your own currency. And through that relation comes whether the rand appreciates or depreciates. What that means is that either strengthening or not strengthening. Now, in periods where the dollar is weakening, let's look at the period since November 2024 and from there look at the dollar's trend over the 20-year trend line, is that the dollar was extremely expensive. And what that means, it was very overvalued if you look at its 20-year value. It was about 17% overvalued come November 2024. And that's quite important. That's a month that's quite important because that's Mr. Trump's presidential election win.
Yes.
And since that period, if you look at it currently, it has weakened. If you measure it as against a basket of currencies, it has weakened by more than 11% currently. And the consequence of that has led to the rand to strengthen. But why has the dollar weakened? That's the key question. Why has it now trading at about 16 as an index point against a basket of the currencies where it is currently, coming close to its 20-year average line? And fundamentally, it's driven by interest rates, the expectation of interest rates in the U.S. economy. Since September 2024, this U.S. Federal Reserve has cut interest rates by about 175 basis points. That's about 1.75%.
Okay.
That's important because interest rates determine the demand for your currency. If you have a high interest rate, usually there's more demand for your currency. And the relation of that is that, think about it this way. You have one bank that's offering you 5% return on your savings, and you have a bank that offers you 4% returns on your savings. Which one do you go for?
The 5% one?
The 5% one. But let's say now the 5% one drops its interest rate from 5% to about 3%, but the 4% still remains. Which one do you go to then?
Now the 4%.
Now the 4%. Now imagine these banks as currencies, and what the interest rate is determined by the banks, the central banks, because that's essentially what they are. They are a bank that lends to other banks. And once the U.S. central bank now starts to cut interest rates, it means that the savers in the U.S. as well as international investors are getting less return for their dollars. Whereas other countries like South Africa, for example, that maintains higher interest rates than the U.S. South Africa's interest rate currently is about 6.75%. U.S. interest rates are usually in a target range of about 3.5 to 3.75%. South Africa's interest rates are above that of American interest rates. So now once you have the central bank cutting interest rates, investors look at them like, hey, listen, we want to park our money where we get a higher return, and that's not the dollar. Currently, that's other emerging markets that fundamentally have a higher interest rate than the US dollar, leading to the dollar to weaken, that demand for the dollar to now come off. So that's one part of it, cutting off interest rates. A second part of it is that if you look at markets, these are pension fund managers, these are central banks, these are sort of hedge funds as well. Trading and their trading strategies, they look at global sentiment as, are things going in the right direction or are things going in the wrong direction? And over the past 2 years, things have actually been going in the right direction in terms of the global economic outlook. What I mean by this is that the war in Gaza has effectively ended, and the prospects of the war in Europe is also looking to end. If you look at the Trump administration's tariff policies in terms of its other countries, those were muted because it was used as a negotiation tactic rather than something set permanently, meaning that countries lowered their tariff levels, and the effect that most economists had in April of last year was muted. Global economic performance at that time was expected to come to about 2%, but now it's actually eclipsing 3%. And that's largely showing that there's muted effects of those tariffs. And you also have coming wars now. And so investors look at this as like, okay, things are looking to be coming off, and that eases their nervousness, allowing them now to seek higher yield in emerging market currencies like the South African rand.
Okay.
A third part of why you're seeing a weaker dollar is that what we're seeing in central banks is that central banks, as well as hedge fund managers, are parking their investments in gold rather than the dollar. Now gold's taking up the safe haven asset class than the dollar.
Yeah.
And fundamentally, that has led to a weaker demand for the dollar, and now record high gold prices that you can see now, where gold prices are trading about 5,500 per ounce against the dollar. And that has also benefited South Africa because now you're seeing an increase in gold, but not only that in gold, the weaker dollar has also supported that of commodity prices because they're quoted in dollars. So if the dollar weakens, usually you see an increase in commodity prices, such as that of PGMs. South Africa's exports are primarily PGMs, and to a lesser degree gold.
Just a PGM?
Platinum group metals. That's what platinum group metals. So it's your commodities that are used in industrials, or some of them as well as that of safe haven assets like gold. South Africa's gold production has massively declined over time, and we're only accounting for about a percentage point of our total output of gold production in the country. But even that, if you look at the numerical value of gold as well, South Africa's trade balance, which is essentially the difference between our exports versus our imports, has benefited from the rally in commodity prices, which means that there's more demand for the rand when we export. So that pushes up the rand, it strengthens the rand. Another key theme that we've seen is that the waning influence of the dollar. The dollar, we started this conversation by mentioning the dollar as a global reserve currency, but if you look at the US dollar as a share of global currency reserves, what this is, every central bank has a mandate to have foreign currencies in order to prevent price shocks of their currencies. And the established parking of safe havens of foreign currencies has always been the dollar since August of 1971, where the dollar became the global reserve currency. And it was a safe haven asset. And what we've seen is that the dollar as a share of all global currency reserves has dipped from 79% in 2001 to about 57.9% at present. While that's also going on, China is massively industrializing. They're becoming a manufacturing hub of the world. Not only that, but the Chinese renminbi, if you look at the payments used on the international SWIFT payments, the ratio between dollars to Chinese renminbi goes from about $160 to one Chinese renminbi about a decade ago to now currently about $10 to about one Chinese renminbi. So that has waned on the dominance of the dollar, taking away that natural demand for the dollar, leading to a weaker dollar, and for the South African currency to massively appreciate to where we're currently seeing it, where it's at the strongest level since June of 2022.
Yeah. So you've packed a ton in there, and I think just to kind of unpick exactly what that means, the implications of everything you talked about there. So we should take it as this growth level where we were talking about earlier,
yes,
and the strength of the rand. They are tied in to external forces.
Yes.
And we can see that the growth level is improved mainly because of the international trends.
The growth level has improved mainly because of the international trends, you're correct there, but also a stronger rand leads to South Africa's, because we import as a country, we import the materials needed for businesses to operate and go about their operations. Those input costs, because of a stronger rand, have declined by quite a dramatic amount. But also in that period as well, we've seen the South African Reserve Bank also cut interest rates. In fact, in the same period in which you saw the U.S. Federal Reserve cut its interest rate. South Africa cut to a lesser degree, about 150 basis point, 1.5%. And what that means is that the cost of borrowing has become cheaper. If you're a household, say you have a car loan, you have a mortgage, and your monthly repayment has become lower, freeing up disposable income for you to spend on groceries or for other goods. Now, if you're a business, that means that your cost of capital, which businesses either borrow through equities, which is through investors, or they borrow through banks, which is borrowing, which is through debt. That debt, the interest that they pay on that debt has become lower, which means that now they have a way in which they can either expand their operations, but because confidence is low and fixed investment is low, they're not expanding their operations. But in terms of actually maintaining their business facilities, it has become cheaper for them to do so, and also freed up disposable spending from their side. So those factors, lower inflation, a stronger rand, lower import costs, as well as that of cutting of interest rates as well, has led to South Africa's economic output to improve. But the fundamental drivers that South Africa needs, we need a GDP growth rate approaching 5%, because that's what other emerging markets are doing. And we're not there yet. And we're not there yet because the fundamental indicators, such as that of confidence and fixed investment, are not heading in that direction. So even though in terms of the short-term prospects of South Africa have improved, its long-term prospects remain the same trend that we've seen over the past few years.
So the prospects have improved, but it's from a pathetically low base, and it remains well below the level that we actually need it to be.
Yes.
And the kind of primary limitation there is, you would say, then is public policy.
Public policy.
That our public policy, like, although we have this new GNU dispensation, which has seen, some improvements and minor tweaks here there.
Yes.
Which has kind of calmed things and not meant that South Africa went into like a complete downward spiral of chaos after the election. But it hasn't had the effect of creating the macroeconomic environment that fosters high growth.
High growth. When you're talking about high growth, you're talking about people being employed. You're talking about them spending and businesses investing. And we don't see that in terms of South Africa's long-term prospects, because fundamentally policy is actually hostile to that prospect currently. And that's unfortunately where we currently are.
And so a last kind of big economic trend I want to bring into this is, what is, like, we've been talking about all of these different concepts and themes. What is the effect of the incredible come off reduction in the price of oil?
Yes.
And your energy inputs. What effect is that having mixed in with all of this?
Yeah, as Ian Cruikshank will probably whisper in my ear right now, what does this mean for South Africans? What does this mean for the guy on the streets? So you have a stronger rand, which we've went through the dynamics of a stronger rand, but also what we've seen is that global Brent crude prices have come up quite significantly. Over the past year, they've declined by more than 20%. Wow. And what that means is that South Africa's inflation is primarily driven by our import costs. Those have come down, which has led to South Africa's inflation level to also improve. Now, Gabriel, you stay in London, but your person here that works here in Melrose Arch is your high income earner or upper end middle class individual. They travel to work, maybe their distance to travel works about 10 minutes. But for about 14 million South Africans, they use taxi fares. And that's, for them, it's about an hour to get to work. So when we're talking about fuel, it directly impacts them through their taxi fares. It directly impacts them through the goods they buy on groceries, because most goods in South Africa are transported through trucks, and trucks need diesel or petrol to do so. And once you start seeing global fuel prices decline, and it also means that those trucks, their costs also decline, which they pass on those benefits towards consumers, which you can see through the price in groceries, which gives back disposable income towards South African consumers. Now, that relation, particularly for those individuals using public transportation and spend much of their income on those sensitive items, or in terms of price-sensitive items, the declining global fuel price also is a direct benefit to them in the long term. And there's a slight delay in months when South African petrol prices are set. In fact, South Africa's petrol prices are expected to decline further. And that leads to them essentially having more disposable income. And not only that, but in a macro sense, when you have lower oil prices, it also improves South Africa's inflation outlook. It also then gives the South African Reserve Bank space to cut interest rates. And we also spoke about what that means exactly for households. So this is a benefit for South Africa. We're seeing a stronger rand. We're seeing global oil prices come off. It's a direct benefit for ordinary South African, as well as that for businesses in terms of their operational costs.
And yet, despite all of these incredibly positive macroeconomic factors and the external factors in South Africa, we're going to grow again at a rate that is less than our population growth rate.
Yeah.
And we can only lay, given everything we've unpacked here, the only conclusion is that the blame of that lays at the foot of public policy.
Yes.
Which, as you've mentioned, is completely hostile to business.
Yes. No, exactly. And really the people that we're trying to have a look here is ordinary South Africans, in that they, unfortunately, their prospects currently means that they have a tough environment that they need to contend with. But one of the most remarkable things that I also would like to speak about is the resilience of South Africans. It's still definitely bad that we have such a huge economically excluded populace in the country. But for the ones that can manage to find a job and go to middle class categories, they become resilient because now suddenly, through the failures of government, through public policy, what you therefore have is private medical healthcare, you have private security, and you can also go to private schools, which is a fraction of the cost that they pay in the States. In fact, my rent, as all these indicators, such as that of education and healthcare, is about 7 times more expensive in the States compared to South Africa for the same quality. Yeah. Now we have good schools that can match them. We have good healthcare facilities that also match them. But you're paying quite a high price to have that in America compared to here. So if you're a South African, that you manage to get yourself to university, you manage yourself to get skilled, and you manage yourself to get an income that will get you in the middle class category, your life will remain what you've seen over the past few years. But unfortunately, the ones that we have an emphasis on, which is the huge pool of South Africans that are unskilled, these are people that unfortunately didn't have the opportunity to go to university. These are particular individuals that have dropped out of university because either through bad schools or through their own choices are excluded. Their unemployment level is actually above that of South Africa's nearly 32%. Their unemployment level is about 35% for someone that doesn't have a grade 12 certificate. So it's much more harsh for those individuals. And in order for those individuals to actually, their lives to start to improve, you need to massively improve confidence levels in the country, which would therefore also improve South Africa's fixed investment number to be that of emerging markets. And out of that, for South Africa's growth rate to reach 5% and for that particular individual to have a job.
Well, Bheki, I think that is a great place to end it. And thank you so much for taking the time to speak to me today. And for the ladies and gentlemen who will be desperately wanting to see you again, they will see you in a not too short a time, I'm sure, in a later episode of Making Sense. I've been Gabriel Makin, and this has been Talking Sense.